Hello and welcome everyone to day 3 of the 2024 US Expats Financial Conference, brought to you by the American Expat Directory.com and sponsored by Expat Focus, the web's favorite destination for anyone moving or living abroad. We have a fantastic schedule for you consisting of 9 sessions over 3 days, covering multiple aspects of financial information for Americans living abroad, with perspectives from some of the world's foremost experts in their fields. Today is the 3rd day of the conference, and for this, our first session of the day, I'm delighted to be joined by Natalie Goldstein, who will be discussing US tax rules and requirements for Americans living abroad. Before we start, though, please bear in mind that the information presented is for general educational purposes only, and you should always seek your own personalized financial advice. Note also that while the conference is free to attend, if you'd like to leave a tip towards organizational costs, you can do so using a card at the PayPal link I'll drop into the chat window at the foot of the screen. Natalie will be answering your questions at the end, so please add them in the Q&A pop-up at the foot of the screen throughout. Whenever you think of them, we'll try to get through as many as we can, time permitting. So without further ado, over to you, Natalie.
Perfect. So let me share my screen, and Hugo, you just let me know when you see it and it's all good, and then I'll start.
Yeah, all good.
Perfect. So yeah, welcome to a session about filing taxes in 2024 for your 2023 taxes. I hope the information I give you will be, clear, concise, easy to understand, and also a little bit entertaining, right? Because taxes is generally a boring topic, so hopefully it won't be too boring for the next hour. Of course, there's going to be a lot of questions. I probably won't be able to answer them all. I will go into rapid answering mode at the end, but I usually don't get all of them. So if you are interested, we do have a Facebook group, right? A lot of expats are in there. You can ask all the questions you want. You can message us there, and a lot of the questions then get actually directed to me at the end. And, I let my team know how to answer them. So again, if you don't get your questions answered by the end, make sure to join our Facebook group, My Expat Taxes Facebook group, and you will be able to get all your US tax questions answered there. So without further ado, we already covered this if you joined right from the beginning. I am from San Jose, California, now living in Vienna, Austria. I don't really like the code, but it is what it is. My background is in finance and information technology, and I am just like you. I moved abroad in 2015. I found out I had to file US taxes from abroad. I was working for a large international IT company at the time. They told me they can't help me. I'm on my own. We don't want to get involved. And I basically had to start my journey there. I looked at the different providers that were in the market. I did not like them because they were charging, a lot for what I was earning at that time. And so I decided there should be a tax software for expats, because obviously there's affordable tax softwares if you live in the US. However, using them as an expat can result in pulling out a lot of your hair because of the frustration. And that is how we came to create My Expat Taxes, the now leading tax software for US expats. Anyways, what we'll talk about today is, kind of the juicy stuff for the new year. What are the tax savings? What are the refunds that you're eligible for? And then after that, we'll obviously get into just the basics of filing, right? There's a lot to know. I'll try to condense it in a way where it's easier to understand, and hopefully you leave this feeling, okay, I got this, versus, oh man, I don't want to even start. So the fun stuff. For the new tax year, right? These are the benefits that we get as expat taxpayers. I mean, generally for all taxpayers, but these are ones that we also get as expats. So the standard deduction increases every single year due to inflation. And this year it's increasing about $900 per filing status. So you'll see in a later slide what's the actual kind of standard deductions, because they're usually in line with the filing thresholds. Tax brackets also have increased, and the tax rates stay the same. What that basically means is more of your money is taxed at a lower rate, or at least it's not taxed at a higher rate than the previous year. We'll also see very important benefits is the foreign earned income exclusion increases quite a bit. So it was $112,000 last year that you could exclude using the foreign earned income exclusion. If you're used to filing, you probably know what that means. This year, it's up to $120,000 US dollars. So it's quite an increase. And of course, if you're using housing deductions on top, you can exclude even more income from US taxation. And another really cool increase, which I did not see coming, is the refundable child tax credits also increases another $1,000. So if you've been used to getting these refunds for child tax credits, if you don't know what I'm talking about, we'll get into it. But if you're used to getting them, expect even a little bit more this year, right? So it's jumped from 1,400 in 2021 to 1,500 last year, and now it's jumping again to 1,600. Couple other things to just note, right? Not necessarily refund increases. However, if you are contributing to your IRA from abroad, and I know there's a good session later today about, investing as a US expat, but if you are contributing, just know that the max contribution is up to 6,500, and it can be even more if you're over the age of 50. There's also a couple new exceptions to pulling out any retirement income. If you do it early, there's, additional exceptions to the 10% tax. So that is something to just note that you might be able to take advantage of. There's a new clean vehicle credit. I know that's kind of circling a lot in the normal US kind of tax circuit, but just know that this is normally for people living in the US. So if you heard about this, if you say, oh, I can claim, my electric car, and not necessarily, because again, in the instructions, it's primarily for those that are using cars in the US. They really do specify it. One other very important thing is if you have not been filing, if you're coming here totally fresh, you're saying, I haven't been filing, I don't know what to do, I need to get caught up. Just know that this is the time to get caught up, because if you haven't been filing, if you didn't get your stimulus payments from, way back when 2020's return, 2021's tax returns, this is the final year to claim all 3 stimulus payments. And I'll talk about that shortly in our streamlining slide. And again, in the US kind of tax circuit, maybe you've all heard about this IRS Direct Free File program, which is giving obviously TurboTax and H&R Block a run for their money. That is not yet supportive to expats. So we're seeing if they'll support international income. At the moment, it's only for a few US states, and international income is not yet supported. So, let's see how that continues. However, of course, expats tend to be kind of the last to get these benefits. So that was everything that is for 2024 in a nutshell. Let's get to the more important things that we need to know about filing US expat taxes. So I think the biggest question we always get is, why do we even have to file from being abroad? Who needs to file a tax return? When do I have to file a tax return? Is it based on age? What causes me to have to file a US tax return? So I will start with saying, if you are a US citizen, you have to file taxes. That's really pretty much what it comes down to. You'll see that screenshot on the slide where it's in your US passport in the back. There's a section saying, no matter where you go with this passport, think about your US taxes. Another thing that might get people is it's also for US green card holders. So if you're a US green card holder, you're also seen as a US tax resident, even if you're not residing in the US. And on top of that, if you're a US green card holder and you left the US, you let your green card lapse, you thought you gave it up. If you did not give it up formally via Form I-407, you are technically still required to file US taxes. So again, if you are a US green card holder, or you thought you gave it up, but you didn't do it formally, you're still on the hook for US taxes. Now, which of us, US citizens and US green card holders, actually have to file taxes? It all comes down to your worldwide income, right? Is your worldwide income over the filing threshold? And you'll see the filing thresholds there on the screen. I won't, repeat them all. A couple of things to note there is the filing threshold is usually the same as the standard deduction, except for married filing separately. You'll see that it's very low for married filing separately, and it's been this way since 2018. But if you are married filing separately, your filing threshold is only $5. So if you make over $5, and again, that's including worldwide income. So that includes, foreign bank interest. And we all know interest rates got really high. So if you make over $5 in your bank interest from the UK and you're married filing separately, you have to file a US tax return. That's what it comes down to. So another thing to note is if you're self-employed, then if you make over $400 of net self-employment profit, even if that's not your main job, if you're just doing this on the side, if you have over $400 of net self-employment profit, you have to file a tax return because you might be subject to US self-employment tax, which is a Social Security tax. So those are things to be cautious of. And I will say married filing separately gets a lot of people, because if you are married to a non-US citizen and you don't otherwise have, a US dependent, and you don't pay for more than half the cost of keeping up your home, meaning you can't qualify for head of household, then you have to file married filing separately. So again, if you're married to a non-US citizen, you're most likely filing married filing separately, unless you get them an ITIN and get them on your US tax return. So just be aware of that $5 threshold. And as I said, it's about worldwide income. So it's not about US income. It's about all your income from all sources. So US retirement income plus foreign retirement income plus foreign salaried income, self-employment income, interest, rental. You get the point. If you're renting out a property in Germany and you're getting rental income, you got to report that as well. That's also subject to US tax if you're a US citizen or a US green card holder. So again, keep that in mind, that it's about your worldwide income, gross income. So, before deductions, before taxes, your gross income. And if you're over the filing threshold, you have to file. So again, it's not really dependent about age. It's dependent on how much money you earn. And of course, if you're 65 or over, the filing thresholds will be slightly increased for you. I don't have that here on the slide, but just know that if you're 65 or over, that your filing threshold is slightly higher, except for married filing separately. And if you have children, if you're wondering, when do my US children have to file a US tax return? Again, it's not necessarily on age. It's about how much money do they make. But if you do have US children and they have a lot of unearned income, so that is most likely to be investment income. Say you opened up brokerage accounts for them or some other type of investment vehicle, and they're earning a lot in interest. So, over $1,000 in interest, dividends, or other types of unearned income, you may have to watch out a little bit closer that they have to file their own tax return, or they have to at least include their unearned income on your tax return. But moral of the story is, basically, it comes down to how much income you earn and if you pass the filing threshold or not. It's not about age, right? It's about how much worldwide income you have. So if I said that and now you're freaking out and you're saying, I have not been filing taxes, the IRS is going to get me. I think I saw a message this morning that says this person literally has nightmares of the IRS knocking on their door. Please don't. I haven't heard of the IRS traveling necessarily overseas to a normal person's house in Germany and knocking on the door like, hey, you haven't been filing. But of course, if this is something that's eating at you, you should be tax compliant, because it is your legal obligation. As I said, it's the law, it's in your passport, but there are ways to catch up. So if you're not filing, you can always go through the streamlined filing procedure. That is an amnesty program. Obviously, I just try to condense this because this is a basics webinar. But if you haven't been filing, the main thing to take away is that you don't have to worry about 10 years of back filings. If you moved abroad 10 years ago, 30 years ago, and you haven't filed since then, if you just forgot, life got in the way, that's okay. You only need to do 3 back years of taxes. So that's 2020 to 2022, 6 back years of FBARs. And we'll talk about what FBARs really are later on, but that's, basically this foreign financial and financial bank and financial account report. You only have to do it back to 2017. And then obviously your current year tax return and FBAR. And then you will be seen as tax compliant. And the best thing about that is, if you do it now, if you file your streamlined procedure before June 15, 2024, you are eligible to claim all 3 stimulus payments. And that is up to $3,200 of refunds, plus any other unclaimed refunds you might have had from child tax credits, or, maybe just federal tax withholdings in case you still have, accounts back in the US. So again, very important that if you have not been streamlining or have not been filing, to look at streamlining and to look at it sooner than later, because there are a lot of refunds that are still on the table. So like I said, these are the refunds. I don't go through into it too much, but if this is something interesting for you, take a look at this slide again, take a screenshot of it. But if you haven't gotten your stimulus payments, you can still get them up to June 15, 2024. It's pretty risky to wait until exactly that date, because you have to paper mail streamlined returns. So I do recommend a bit earlier. But the general, story is there's a 3-year payment refund window that the IRS will honor. and we're about to hit it at June 15, 2024. So if you file your 2020 return before then, you may be eligible for the first and second round of refunds, which you see on the screen was $1,200 per taxpayer plus any extra for dependents, $600 per taxpayer plus anything for dependents. And the third round would have been on your 2021 return. So there is still time to claim that refund. However, normally people would just go through streamlining and get all the refunds at once. So what are the deadlines if you are generally, caught up with your filings and you're not back filing or anything, you're just caught up? Well, the deadlines for this year is, of course, April 15th. I think this is one of the first years we actually have an actual April 15th deadline. It's generally April 15th, or, if that day falls on a holiday or a weekend, the following workday, so to say. But April 15th is the general deadline for people living in the US to file their taxes and to pay. It's also the deadline for people that are not living in the US to pay, not to file, but to pay. So yes, that's very confusing, I think, for most people, because what it comes down to is if you're an expat or you're abroad on, April 15th, you get a 2-month automatic extension to file your taxes. And this year that falls onto June 17th. So if you're an expat, if you're living abroad, you don't have to file your taxes until June 17th. But if you owe taxes, you better have paid by April 15th if you don't want interest in any penalties. I know the automatic extension is only to file and not to pay, but how do you know if you have to pay if you don't file? So again, what I normally tell folks is if you moved abroad in 2023, if you have a lot of US source income, if you just know that you end up paying US taxes every single year because maybe you have some type of foreign income that's not taxable where you live, or you pay very low income tax in your foreign country, please file by April 15th, or at least start your return, model your return, so you know how much you might have to pay so you can make a proper extension payment by April 15th. If you're living abroad for a long time now, or at least for over a year, you're not going to pay any US taxes. You only have foreign salary. It's not over 100K, or you live in a country with really high income tax rates like Austria. You can wait until June 17th, right? If you generally think you're not going to owe any taxes. So that's no problem. And of course, you can always extend to file. Again, you can't extend to pay. Payment's always April 15th, but you can always extend to file even further. So if you want to extend by June 17th, you can basically e-file the form 4868. We allow you to do that for free in My Expat Taxes. We make it very simple to do that. Or you can obviously print out form 4868 yourself, fill it out and send it to the IRS via paper mail. I don't know if it's going to arrive before October, but you could also do that. Another little hack that you could do is you can actually go on irs.gov/payments, and you can make a $1 extension payment before June 17, 2024, assuming that you're an expat, right? That will also give you the extension into October. So those are the 3 ways you can file online with My Expat Taxes or another tax filing program, or with a firm that you're using. You can paper mail this form, or you can pay $1 as an extension payment for that tax year before your filing deadline, of course. I don't cover on this slide, but if you can't make it to October, so say you have, a foreign company, you have to wait for your foreign financial statements, you can actually extend further to December 15th, but that is a lot more involved because you have to actually write a letter to the IRS. They may or may not approve it. So I try to say stick to the October deadline. And there is one more deadline in between that people are not always aware of. In November, around Thanksgiving, they actually shut down the e-filing platform completely. So usually if you don't e-file by this e-filing shutdown date, you're going to have to either paper mail your return or wait till the next year. So a lot of information, just focus on the dates that you see on the screen. That's the most important for you. And obviously, if you're not filing, do it sooner than later because interest and penalties accrue daily. That is another benefit of the streamlined procedure I talked about, is that at least if you go through that amnesty program, if you did owe taxes, you will get late payment and filing fees removed. Interest won't be removed, but you'll get those late penalties removed. So what is in your US tax return? If you're filing US taxes for a while, or you haven't done it right before, either way, you're probably going to be shocked at what you see in a US tax return, because it's it's heavy. There's a lot of stuff going on. There's a lot of different forms. It can easily go to 50 plus pages with all, the background calculations and worksheets. But what you need to focus on are these forms. These are the basic forms as an expat, whether you do it yourself, like really do it yourself with, paper and pen, or if you do it yourself with a tax software, or you go with a firm just so you understand your own tax return. There's form 1040. This is your overview form, your income, your deductions, right? How much tax you owe, what's your refund. There's a couple schedules attached to 1040, and that's just, it's still all 1040. It's just somewhere in 2018, because, of a certain president, they decided to cut up the form 1040 into a lot of different schedules, and it's kind of stuck since. Another form which is important is if you do have children under the age of 17 with valid social security numbers, you should see if this schedule 8812 is in your tax return. That's for the child tax credit. Like I said, you can get tax deductions, which will be covered in the next session after mine, or you can even get a refund of up to $1,600 per qualifying child. Now, if you're an expat, you probably know either form 2555 or 1116. Or even 8833. Those are the 3 different tax forms that cover kind of how to reduce your tax bill. Again, this is covered in the next webinar session, but terms to be familiar with: foreign earned income exclusion, foreign tax credit, and tax treaties. And of course, something that is also attached to your US tax return, but somewhat separate, is your FBAR and possibly a FATCA form, which we'll get into. But these are kind of the most important forms. Obviously, if you have different types of income, you'll see different forms and schedules, but these are the most basic forms for generally all expats. Like I said, again, there's going to be a more in-depth talk about these different expat tax benefits, but quick overview is, or let's just put it this way, most expats will say, why am I being double taxed? How do I prevent being double taxed? You are actually rarely ever double taxed. There's so many tax benefits that the US does allow that it's very rare to be double taxed. It can happen, but it's very rare, because basically what you can do is you can use the foreign earned income exclusion to exclude over 100K of foreign earned income. Keep in mind, this is for income that is earned, that is foreign source. So basically you had to have worked abroad, and it has to be earned income. So like salary, self-employment, it doesn't count for things like retirement income, passive rental income, interest income. And again, if you work in the US, even if it's for your foreign company, your foreign employer, that's considered US source income. But essentially there's a foreign earned income exclusion. If you can't use that, or you don't want to use that, you can use the foreign tax credit to use any taxes you pay abroad as a credit on your tax return on the US. I think that's the one that's probably, in our opinion, sometimes the best benefit, because you can really accrue a nice collection of foreign tax credit carryovers, especially if you live in a high income tax country. And of course, there's tax free benefits for income that, like I said, is not earned income. So retirement income, it's not earned income, so you can't use the foreign earned income exclusion, but you don't pay any tax on it because, say, it's government retirement income and there is no tax on your social security benefits, in Germany or whatever. What do you do? Well, you probably can use a tax-free benefit then to exempt it from US taxation, or at least have only one country tax that income. So I don't go through everything on the slide because there's a more in-depth talk. However, the main answer is no, you are rarely double taxed. It can happen in the situation if you have a foreign company and you have guilty taxation, or it may happen in the form of net investment income tax, things like that. But generally for most expats, you are not double taxed. You will be taxed on income if you're not taxed abroad though, but don't get me wrong, that you may definitely get taxed there, but you're not double taxed. Again, this is also more into the next webinar session, but just so you understand, what are the child tax credit refunds? Why do I keep talking about them? If you have children under the age of 17 and they have valid US Social Security numbers, and you generally live in a country with a higher income tax rate, this should be on your tax return, because you're probably missing out on refunds if it's not. But you can get up to $1,400, for your dependent between 2018 to 2020. And like I said, it's just been increasing since then. So if if what I said applies to you, you're an expat living, AKA in Germany, you have children, they're under 17, they have US Social Security numbers, you're claiming them every single year on your tax return, you have, salary that you pay income taxes for, so you can use the foreign tax credit, you should be getting probably a refund on your tax return. And if you're not getting a refund on your tax return, it's really important to figure out why not, right? And you can actually amend prior tax returns to basically change your approach, right? So if you're using the foreign earned income exclusion, that might be a reason why you don't get a refund. So you can definitely still change prior tax returns to get refunds. But again, this goes into optimizing your tax return and things like that. But something for you to just keep in mind of as you do your returns, either yourself, with a tax software, with a firm, just know that it's not about just filing US taxes to get the paperwork done. There's actually a lot of optimization you can do. You can actually still get a refund if you're an expat. There's ways to get the stimulus refunds, the child tax credit refunds if you're eligible for them. There's a lot of optimization that you can do. And if you start thinking about making US investments like IRA contributions or things like that, there's even more that you can play around with. So again, it's not just about filing a US tax return to file it. You can use it to your financial advantage. So something to keep in mind. It's not all bad, is what I'm saying. Next slide is FATCA. What is this? Why do people care about my bank account abroad? So if you're an expat, I'm sure this has happened to you. You go into your local bank in France. You say, I want to open a bank account. And they're like, yeah, sure. And then you take out that US passport, and then you just see the color drain from their face, right? Yeah, this is FATCA. This is a double reporting requirement where basically, if you're a US citizen, if you go to a foreign bank or a foreign financial institution and they found out you're a US citizen, they have to report all of your assets to the US Treasury. You also have to report all of those same assets to the US Treasury and potentially also the IRS. And so it's something that's quite serious, right? There are definitely penalties attached to not filing these forms. So it's important to make sure you file them. Just basically for you to realize is it can be a bit confusing. If you have over $10,000 of combined max balances, then you have to file the FBAR, Form 1114, right? This FBAR is filed to the US Treasury. It is not filed to the IRS. It is separate from your tax return, right? It's filed to a different department and it's e-filed. If you have over $200,000 in combined max balances on the last day of the year or 300K at any time in the year, and if you're married filing jointly, these amounts are doubled, you'll have to file the FATCA form. So Form 8938. This is actually included in your tax return to the IRS. And the FATCA form is basically just an extended version of the FBAR. It's pretty much all the same information, just a few extra questions and check boxes associated with them. But really, these two forms you cannot take too lightly because there are penalties attached to these forms. And, obviously, what is a combined max balance? This is just a quick overview, but what you have to do is you have to look at all your different financial accounts. So it's not just bank accounts, it can be pension accounts, it can be brokerage accounts, any financial account, anything that's based in the US, yeah, not relevant. Only those that are foreign, based abroad, right? So you look at your non-US accounts, and then you look at what's the maximum balances. Keep in mind, obviously banks and your institutions don't really give you a max balance. So you're probably playing with Excel or you're looking at monthly statements. Anyways, you look for the max balance. And even if you just transfer money between accounts. So if you transfer money from bank account number 1 to bank account number 2, you're saying, well, my max balances are inflated because that's the same amount of money. It doesn't matter, right? Max balance is max balance, even if it's inflated because you're just transferring money between accounts. Add up the maximum values, convert them to USD using, year-end treasury rate. If it's over 10,000 US dollars, you have to report every single foreign financial account that you have on the FBAR. Even if those individual accounts are not over $10,000, once you exceed the $10,000 filing threshold, every single foreign financial account must be reported, even if there's nothing in them. Remember that. A lot of information. I hope it was concise and easy to understand. I obviously can go a lot more in depth, but I don't think we're all ready for that at this point. So obviously, if you're looking for a tax solution, My Expat Taxes is there for you. You can do it yourself at a very affordable rate. You can hire a tax professional through My Expat Taxes to do it for you, right? Once the deadline starts coming in, you know that I'm jumping on tax returns as well, because there's a lot of expats out there. But anyways, there's resources out there for you. And there's, luckily there are more expat tax firms also popping up in expat tax services, just because the world is finally realizing that us expats shouldn't be ignored. So that is the end of my presentation, and I am ready for any questions that you have for me. Hugo, you'll have to tell me if I just start jumping into the Q&A or...
Yeah, no, thank you very much. What I'll do is I'll read out some questions for you. There are loads already, as you might imagine. So let's dive straight in. Some of them are really long and personal, and for those you may have to contact Natalie directly afterwards. And there are a few comments about what we were talking about before and catching some winter sun. So why is the threshold different for married filing separately? Let's start there.
I really don't have a better answer for you, except for it changed when we got a new president in 2018. They just changed the tax law, and then it just changed that married filing separately was a $5 filing threshold, and they never reverted it. It stayed that way since 2018, and I don't see them reverting it. But married filing separately, you have the same standard deduction as single. It's just the filing threshold is a lot lower. And that's because I guess the IRS thinks that if you're married, you should be married filing jointly. And if you're married filing separately, they think you have something to hide. I honestly think that's the reason. They just don't think that, okay, a lot of expats are, moved abroad for love and we're married to a non-US citizen that does not want to be on our US tax return.
Cool. Okay. Is the child tax credit limited to 18 years old children, or does it still apply for children at any age if, for example, permanently disabled?
So it really depends. So there is two parts to the child tax credit. So the child tax credit, the refundable portion is usually limited by age, right? And so they have to be a certain age, and it's normally 17 by the end of that tax year. So that is for the refundable portion. For the child tax credit, there's actually a second part for other dependent credit. So if they're older than that, or, if they're permanently disabled or anything, you can either fall into the child tax credit portion or the other dependent credit portion. And that is a deduction. It's non-refundable, but it's a deduction on your tax return. But for the refundable portion, there is an age limit.
Okay. Somebody says they've lived in France for 30 plus years, have usually filed their taxes and FBARs, but hasn't for a few years. How can they see which years the IRS has received their tax returns?
So you can always access your online transcript. It's not the easiest thing to do, but I highly recommend that people invest the time to do it, because if you're filing taxes, you should have access to your online records. Just go to irs.gov, look for an online account, and then normally for an expat, it's going to be a little bit difficult to say, because you obviously don't have a US mobile number or US credit cards to check. So they do have a video authentication process. It's not the easiest, but I've gone through it myself. I did have to pull out an old W-2 from when I worked in the States to prove my name and old address. But there is a way to do it. Otherwise, you can always call the IRS. You can always call the IRS and say, hey, this is my name, this is my social security number. They'll ask you a couple of verifying questions. And then you can say, what do you have on record for me? I don't think that necessarily causes a flag on your account, but maybe you don't want to call the IRS. It's up to you. Those are the options.
Okay. Which official forms should I receive for selling my home in the US, if any?
So if you sell your home in the US, you'll normally get Form 1099-S, I believe. You'll get Form 1099-S, and they'll basically report how much money you get. Now, the more important thing is, even if you don't get this form, if you sell property, whether in the US or abroad, you have to report that on your US tax return. And normally, assuming that it's a personal property, you might even be eligible for Section 121 exclusion. I go a little deep, but this is just so you know, if you sell property in the US or abroad, and it was your primary home and you used it for 2 out of the last 5 years, you owned it for 2 out of the last 5 years, you can exclude up to $250K of profit from US taxation. If you're married filing jointly, it can be doubled. And one more thing to note in there, if it was a rental property, there's a couple other things that you basically have to keep in mind about depreciation. I got sidetracked there, so I'll stop, but you normally get Form 1099-S, and you do have to report that on your US tax return.
It's an easy one for you. Living abroad, what software can we use to e-file?
myexpattaxes.com. We are here to help you e-file, and For us, I think the number one reason I went to solve this is because if you're married to a non-US citizen, most tax softwares will make you get an ITIN or an ITIN for your non-US citizen spouse to just e-file, which is ridiculous because that is not an actual requirement from the IRS. And so my Expat taxes will let you e-file pretty much 99% of the time, right? There's some small instances where people can't e-file, but most expats e-file through us.
Thank you. Somebody says I was not allowed to use the child tax credit because I did not live in the US.
You can still get the child tax credit if you're an expat. It really depends on how your tax return is prepared. If you have Form 2555 in your tax return, that is probably why you're being disqualified, right? Most expats, if you file your taxes, if you go through an expat tax form, that is the default form that's included. Usually with my expat taxes, we'll look at your situation and we'll decide, okay, do you get more of a refund under foreign earned income exclusion or under foreign tax credit, and we choose accordingly. However, I think the first step is to look in your tax return. Do you have Form 2555? If you do, that is the reason you didn't get the refund. And you can always look to see if it might make sense to amend your tax return. Like I said, you can always go on My Expat Taxes, do your 2023 taxes, and immediately you'll see, hey, we think it's good to revoke the foreign earned income exclusion because you get a refund. And then that's kind of a good trigger to say, maybe I should look at amending my prior years.
Yeah, that can make a big difference, can't it? Because there was the refundable part, you could get actually a sort of cash payment if you amend those.
Yeah, you can get a good refund. I've seen people streamlining with kids and with the stimulus payments, with the child tax refunds, like they're getting like over $10,000 in refunds. I mean, it's a great surprise to someone that's been so terrified to file taxes, right?
Mm. So that's about the child tax credit. If you haven't been able to file it, maybe worth amending your returns with an expat specialist who understands kind of why and how you can get that because you are eligible. Here's a good one. If I have self-employment income below the foreign earned income exclusion threshold, would I still have to pay social security taxes?
So there is a different threshold for social security taxes. If the foreign earned income exclusion, that's for federal income tax purposes. But for self-employment tax, which is the social security tax, the threshold is $400. If you have over $400, you may be subject to 15.3% of self-employment tax. Now, if you live in a country with a totalization treaty with the US, so Germany or the UK, a lot of countries in the EU will have it. If you are registered as self-employed there and paying self-employment taxes, you don't have to pay the self-employment tax twice. If obviously you're not registered and you're just kind of like a digital nomad and just earning money, definitely expect that 15.3% tax on your bill.
There's no way around that.
No.
So yes, if somebody says with FBAR reporting, do I have to report credit card accounts such as Visa, MasterCard, or Revolut?
So again, a credit card is not necessarily a bank account, right? You can have multiple credit cards linked to a bank account. So it's about reporting your foreign financial accounts. So the bank account behind it, right? The bank account that's linked to those credit cards. Yeah, definitely look to report them if they're foreign and you pass over the FBAR filing threshold. But the actual individual credit card numbers, you don't have to report, right? Those are just linked to your account, but we're looking at actual foreign financial accounts.
Am I right in thinking you report positive balances, so not debts, as it were, or credit?
Yeah, I mean, normally, so again, the credit card is separate, right? So, but it's linked to your bank account. So you would report what's the maximum balance. Obviously, if you have a negative amount in your bank account, you report a zero. You can't really report a negative amount on the FBAR, right? I would just report it as a zero at that point.
So positive account balances, not card balances.
Yeah.
Okay. Somebody says, if one hasn't filed FBAR and FATCA, how does one come clean?
Streamlining is your best friend here because again, there are late filing fees attached to the FBAR and FATCA forms, and they're pretty hefty. Not that I've seen them enforced necessarily, but they are there. Legally, the IRS has the right to enforce them. Streamlining allows you to file 3 years of federal tax returns, 3 back years, 6 years of FBARs, and then you're seen as tax compliant. You don't have to file anymore, even if you haven't filed for 10 plus years.
So just to make a point, there are loads of questions. If we don't get through them all, I'm trying to pick out ones that are perhaps apply to, more general ones rather than sort of long personal ones. I think personal ones, you do need to consult Natalie or an expat tax specialist. So it's a good one for FAT compliance. Does investment real estate held outside the US count towards the thresholds, I guess, of FBAR and FATCA reporting?
So just a property itself normally doesn't count towards, but again, if there is, some account linked to it. So if you have like a brokerage account or you have some type of foreign financial account that is linked to this property, it's kind of hard to explain that, but basically, again, like if you make an investment, if you buy a property, the property itself, it's not a foreign financial account, right? That is a foreign asset, but it's not necessarily a foreign financial account. But if obviously you have a bank account that is, connected to the mortgage, that's something that you could report. If you actually are investing in a fund of different real estate investments, and there's an actual fund and it's held, in a financial institution or managed there, that is an account to report. But the property itself, like the actual building, that is not something to report.
Thank you. Somebody else about PFIX, but I think maybe we won't get into that now. There's a talk specifically on investments later on. So let's skip over that. Here's a good one. If I want to amend my previous year's filings in order to claim the child tax credit, how many years can I go back?
You can only go back to 2022 up to June 15th. Again, there's a 3-year refund window. The IRS will only honor refunds if they are, received by 3 years since the due date of the return, including extension. So assuming you did not extend those returns back then, the due date of a 2020 return would have been June 15th, 2021. So June 15, 2024 is the absolute last date to ask for the refund. But 2020 returns have to be paper mailed. They can't be e-filed at this point. So it's very risky to wait because obviously the IRS can just say, well, you might have sent it on June 15th, but I don't really want to honor the refund because I didn't get it until June 30th, right? So very risky.
Okay, so yeah, act soon.
Yes.
Don't put it off. That's always something with taxes, I think. Yeah, so are there use case options for built up foreign tax credits? I'm not sure. Yeah.
I think I know what they're saying. I mean, basically, let's put it this way. So you are in Germany. You're getting a salaried income. You're paying a lot of tax in Germany because you just pay a lot of tax in Germany. And you use the foreign tax credit and you'd only use, say, 70% of your, annual German taxes that you pay on your US tax return. You only need 70% of it. So basically, you always have a carryover. And then you retire. And then you get German pension income that you don't pay that much income tax on. But guess what? You have built over 10 years of a lot of German income tax carryovers that you can use from your salary to your pension income, because salary and pension generally fall in the same bucket for, the purposes of 1116 foreign tax credit. So that is a use case. That's probably the most common use case scenario that there is. It can also be, say that you pay a lot of income tax on rental property abroad, and then you then get, interest or dividend income abroad, and then that falls into the same passive category that you can use the carryovers for. But I think the salary to retirement is probably the best use case. So something to think about, because generally people pay less taxes on their pension income than they did on their salaried income.
Thank you. Somebody says, if I have a balance higher than $200,000 for a short time due to the sale of a property, so I guess the proceeds of the sale land in the bank for a short time, maybe then go back to the States, do I have to still file an FBAR if it's only in the account?
1 second. If it's in there 1 second, you had a max balance. It's about max balances. There is no definition of the max balance must have been this max balance for 24 hours or more. It's maximum value of your account. And if your account at one point had that maximum value, you have to report it. Keep in mind, it's not really that bad to report stuff on FBAR or FATCA forms. I mean, the FBAR is pretty low filing threshold, so most people already do it. The FATCA form is the same information, just a little bit more, check boxes, so to say. There is no tax calculated on your max balances. It's not a tax incurring form. It's just a disclosure form. And again, if you do it with myexpattaxes.com, I mean, if you do your FBAR, we automatically just include the FATCA form if you pass the threshold for it. So there's, depending obviously on what service you go through, right? There's no extra cost. Of course, certain tax firms will charge extra for the FATCA form, but for my expat taxes, if you have to do it, we just do it with your FBAR.
So somebody else, can I get a child tax credit if I'm a US citizen, but my children aren't or don't have SSNs?
No. If your children, right, because it's about your children, if your children do not have US Social Security numbers, you're not eligible for the child tax credit refunds or even claiming them as dependents, because you have to be able to claim them as dependents. You can always get them a US Social Security number, right? Obviously, if they're US citizens, you should do it because they still have to file US taxes, not because of the Social Security number, but because of their citizenship. And so if you don't get it for them, you will give them quite the headache later on. We have people, accidental Americans that come in now that say, my parents never got me a social security number. And it's a lot harder to do that when you're an adult versus a kid. Because when you're a child, you just do it at the same time as getting your passport, or you can do it even by mail. If you're an adult, you have to go in person because it's very rare for someone over the age of 11 to request a social security number.
Thank you. Somebody says, in no tax treaty countries like Sweden, my bank does not report to the IRS, but I still report FBAR and FBAR forms. Do I need to?
The US pretty much requires every single foreign financial institution. So I have not yet heard of any tax treaty that blocks it, so to say. But you as a US citizen, regardless of what your foreign financial institutions are doing, you as a US citizen, you are required to report on FBAR and FATCA forms as necessary. So this reporting requirement is not, combined with your bank. It's that your foreign financial institution has these requirements themselves, and you as a US citizen and a taxpayer have these requirements yourself. So yes, you still have to file them.
It doesn't relate to tax treaties, does it? It's just, yeah. And I think probably the banks in Sweden are still sending information.
I would think so. I have not yet heard that.
Okay. Somebody else, their children are dependents, but they're university students. They don't have their own income. Or one had 1,300 euros in a scholarship as income. Can you confirm whether they need to file or not?
So $1,300 is scholarship income. That it really kind of depends if it's taxable or not taxable scholarship income. So there's a couple of different requirements to figure out if something's taxable or not in terms of scholarship income. But generally, scholarship income is seen, if it is taxable, as wages. So if your child had $1,300 in, wages, that doesn't necessarily need to warrant filing a tax return. I will warn that there are very specific rules about if it's grants or things like that, that can mean that you have to put it on your own tax return or something in that. So definitely look into it a bit more. I can't give you a blanket answer without really knowing, exactly what the scholarship income is for, if it's for reimbursements, if it's for traveling, et cetera, et cetera.
Interesting. Somebody asked a similar question. What are the income limits for working college students to have to file?
Same exact income limits as you, right? It is standard is a little over $13,000. Married, I mean, obviously they're probably not married, right? But single is over 13,000 US dollars. So it's the same exact as yours. And if they don't hit that, they don't need to file their own tax return, right?
Does self-employment income different? If a student's, I guess, doing, gig economy or something, self-employed?
Self-employment's the same. If you have over $400, you need to file a US tax return.
$400, yeah. So then it becomes a lot lower. Okay. Somebody says, what to do when the IRS keeps sending you multiple letters requesting 60 more days before answering a claim?
I would normally whenever someone gets an IRS notice, the first thing we do is look to call that IRS. Either they do or we do for them, right? Because obviously mail takes forever when it's international. So the first thing you want to do is call the IRS and say, hey, I got your letter. Please put a hold on my account. Put a hold on my account so I have enough time to respond. And they will normally tell you they'll put a hold for another 3 months or X amount of weeks so that you can have appropriate time. But obviously, the first thing to do is to call the IRS and just figure out what's going on, what are the penalties, how to put a hold, because that really helps to stop the letters, right? And again, the letters they come and there's a delay, so it can be very overwhelming. I do want to go back to the dependents question. Remember, for dependents, if you're claiming them, right, there is an income threshold to which you can claim them. So if you do have children that are in college, if they're earning income, right, there is at a point where you can't claim them anymore because their income is too high. So that's usually a trigger to start looking if they have to file their own tax return. But anyways, let's continue on.
Interesting. Somebody asks, how much does my expat taxes cost? And I think they can just go to the website and see that.
You can just see it.
myexpattaxes.com.
Exactly. myexpattaxes.com. I mean, for just standard do-it-yourself filing, it's always 149 euros. Obviously, if you want more, there's increases in price depending on what service level you want. But if you just do it yourself, 149 euros.
Somebody says, if I sell my US home, it was once my primary residence for 2 years, and is now a rental while I live abroad. It's a complicated one. How is the depreciation deduction I've started to claim counted when it comes to sell?
Once you have a home that you've converted to business for rental use, you can definitely expect that you're going to have to report that sale not on form A949, but you're going to be reporting that sale on form 4797. Don't quote me on that, but basically it's for sale of business property. And then what you see on that form is there's going to be the depreciation recapture calculation. So any long story short, is what you have is you obviously have your cost basis of the home, right? That cost basis of your home is going to be decreased by any depreciation that you've claimed. So say that your cost basis is 500K, you've claimed 100K of depreciation up to now. Your cost base will basically be lowered to 400K. So your taxable proceeds is going to be anything, 1 million minus 400K. You can still look to use the section 121 exclusion if it was your primary home 2 out of the last 5 years and you owned it 2 out of the last 5 years prior to selling and you haven't claimed the section 121 exclusion within the past 2 years. So you still are eligible for that. However, there will be this depreciation recapture calculation included. My Expat taxes will do that automatically for you. We can support that as well. However, it gets a little tricky, but long story short is any depreciation you have claimed will be recaptured because you cannot have claimed that as a tax benefit before and then now, sell your home and basically still have your original cost basis, right? You depreciated your cost basis.
There are lots of questions that I think are so specific, probably would help to consult an expat tax specialist rather than try and deal with them sort of in the limited time we have. Somebody says, it's quite interesting, my French accountant doesn't know anything about filing my joint French-US taxes. On the other hand, my US accountant doesn't know anything about my French taxes or international filing. I want to continue using them both because I have for a long time. I imagine this is a common problem because as an expat, you have to file both. Yeah. And it's finding somebody who understands the other side. So I guess I'm trying to turn that into a question. What would you recommend to someone in terms of you obviously deal with the US side? Do you kind of recommend local country accountants, or what do you recommend to clients who ask about?
Yeah, so normally it depends on obviously which country you're in, but of course what we usually recommend is you file your foreign taxes first, right? You form your foreign taxes first, and then you provide us with basically your foreign tax return if you're using one of our premium, higher tiers, or you're just claiming your foreign tax credit if you're using, the do-it-yourself tiers. But normally file your local taxes first. I don't think that unless you have a lot of US source income, your local tax accountant doesn't really need to know that much about US tax, right? Just make sure you get your foreign filing done and then use an expat tax firm that does understand about, expat taxes, right? That's the most important. Local tax consultants don't need to know too much about the US because normally that tax filing is first, but the US side, they definitely need to know about, expat taxation and foreign taxation and how to claim credits because that's the most important. If you're in Germany, we do have now an offer to do German and US, right? So, we're looking to see which countries need the most support and we're trying to find ways to give that support because we know it's a common problem, but generally the local one, I think really even using a normal tax software there's normally okay. It's about the US side that you really find an expat focused tax software or firm.
So there's not too much time left. Let me try and do some quick fire questions. Is pension income passive or general income?
So it's normally general income.
Do you have to pay US taxes on foreign retirement account distributions?
Foreign retirement account distributions are reportable, of course, on your US tax return. Most people try to say that you can then use a tax treaty benefit to exempt it, because most tax treaties will say your country of residence has the right to tax foreign pensions. However, that is normally not exempt from the savings clause. So long story short, yes, foreign pension distributions are taxable on a US tax return and should be reported as such. And if someone is trying to claim a tax treaty benefit on it, really look at the tax treaty, because the majority of tax treaties will not give an exemption to the savings clause for pension articles.
I've got a feeling the UK does for some reason. I think there are some exceptions.
There are some, but that's for pension contributions mostly, not distributions. So distributions are normally seen as separate. Contributions, there's about 5 countries that allow you to defer pension contributions from being reportable.
So that's one to be careful with. If you're no longer an expat, you have to file back FATCA forms, I guess, from when you were abroad.
I mean, if you didn't file them, then you're technically not tax compliant, right? So what people who are no longer an expat, especially if you still have foreign financial accounts, there's actually a domestic program from the streamlining procedure. So there is a domestic kind of program to do that. If you just ended your expat residency, I would still probably try to go for the foreign one, because you have to be, the only requirement in terms of being an expat is that you were abroad for 334 days in one of the last 3 years. So if that qualifies for you, you can still use the foreign offshore procedure, which is easier because there's no tax calculated on your FATCA amounts. But if you use the domestic procedure, there can be tax calculated on your FATCA amounts.
Just let's try and squeeze in a couple more. When do you have to file FBAR and FATCA by?
So FBAR is April 15th, but there's an automatic extension to October 15th. So technically, you don't have to do anything for the automatic extension. So it's basically October 15th is your deadline. Just keep in mind, it's October 15th. It's not if October 15th falls on a holiday or Sunday, it's the next work day. It's October 15th. It's April 15th plus a 6-month extension to October 15th. And then FATCA Form 4838 is included in your tax return. So whenever your tax return is due, including extensions.
Okay, one last one. What foreign countries do you support at My Expat Taxes?
All foreign countries. If you are an expat, if you are living in the US and you have to file a 1040 NR, if you're living outside the US and you have to file a 1040, if you're living out of the US and you have to file a 1040 NR, we support you. If you're an expat and you have to deal with US taxes, My Expat Taxes is there for you, right? So do it yourself, hire a tax professional, do a 1-year filing, do the streamlined filing procedure. Honestly, people just come in and we think, what do people need? And then we keep adapting, right? So if you have a foreign company, have a foreign trust, have PFIFs at this point, we've seen it all.
I'm sure. And a few people were saying how can they, if they have more questions, what should they do? If you answer that, I would say we have another session coming up in Lao with another CPA and another one after that. So there are more opportunities to ask questions. If your question is very specific about your circumstances, it probably makes more sense to reach out to somebody. So Natalie, if somebody wants to reach out to you, what's the best way, or if they've got questions about their situation before, for example, using My Expat Taxes, then what should they do?
Yeah, I will ping this in the chat window to everyone. So team@myexpattaxes.com is going to be the email to use to reach out to us. You can go to myexpattaxes.com. There's a little chat, box that opens right up and you'll talk to a human right away. Or if there's not someone available, they'll let you send an email. You can go find us on Facebook at My Expat Taxes, join our group like I promoted in the very beginning, and you can also reach us that way. If you want to find us, you will find us, myexpattaxes.com.